Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of global gold ounce on March 9th. As you can see, last week we witnessed more than 7.5% fluctuation in the price of gold, and ultimately, the weekly gold...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for NinjaTrader 4 and 5 for free now.
Gold candle closed with a 2% drop. At the beginning of last week, following the start of the Iran-US war on Monday, the price of gold experienced an increase, but after reacting to the $5,420 level, it retreated from that area. After this price drop, there was solid support around the $5,000 level, and over the past few days, it has been fluctuating within this range. Today, on the first trading day of this week, we saw that gold jumped quickly to $5,196 at the start of the day, but this surge lasted less than a minute, and from that moment, the trend continued downward. Currently, the price of gold is trading at around $5,094, having dropped by more than 1.5%. Among the news related to gold, we can mention China's continued gold purchases. China has increased its gold reserves for the 16th consecutive month. China has long been considered the world's largest gold buyer, and the recent market behavior confirms this. As you can see, last week gold faced strong demand in all Asian trading sessions, and even with this heavy demand, the surge in oil prices caused gold to stall as well. As you can see on the 4-hour time frame, today the price also experienced a sharp drop during the Asian session, and we can attribute this to the military tensions in the Middle East. Because in the long term, global market turmoil and the possibility of a recession caused by high oil prices can benefit gold, and also a surge in inflation can make gold more attractive. However, in the short term, this turmoil usually causes traders to reduce their risk, and gold, which is a crowded and leveraged asset, comes under pressure. This is exactly what
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.
What happened during the COVID-19 pandemic, when gold initially dropped and then entered a historic upward trend. In the same way, we can see that since the beginning of the war until now, gold prices have fallen by more than 3.5%. Following this decline, two key areas become apparent to us. The first area is the most important key support for the price of gold, which is the $5,000 range. The price has not yet been able to close below this area, and as the key resistance area, we will have the $5,200 price. As you can see, there is a 4-hour FPG in this area for us. If we see the $5,000 support lost in the future, the next support levels for the price could be at $4,950 and $4,900. We are currently analyzing the 1-hour time frame. We can observe the downward movement that has occurred since the beginning of last week, which ultimately ended in a range-bound area. At the moment, given the heightened tensions, I would not recommend trading gold. However, if we do intend to trade gold, we will try to enter sell positions by collecting liquidity on the buy side. As a suggested setup, we can wait for the price to reach the 4-hour FPG area, or even, in case of a deeper penetration, to its previous highs. After observing the price's reaction to these areas, if the price fails to break through this resistance zone strongly, we can enter a sell position and target the internal liquidity levels. Wishing you success and profitable trades.